It's time to run through some adjustments for AGI. A lot of these will have memorization-based amounts, which we will have in the resources linked below. The following, we've got a list of adjustments to income, which are sometimes called above-the-line deductions or deductions to arrive at AGI. A lot of these you may see, let's say you're doing a SIM, it's 1040, individual income tax return. You got all these exhibits, just like if you were doing someone's taxes and they come into your office and slam down a whole folder with a bunch of receipts and papers and documents. A lot of these are items you would then translate onto their 1040. As such, that's the importance. That's why you should know them. First off, we're starting with educator expenses. Now, qualified kindergarten through 12th grade teachers and other school faculty can deduct up to an annually changing amount. It's usually a low amount in the few hundreds. Amount of unreimbursed classroom expenses. Homeschooling expenses do not qualify. Sorry for all you homeschoolers. Traditional IRA contributions deduction. This is something you all may be familiar with, getting into the working world and socking away for retirement. Now, individuals can deduct up to the annual contribution limit per year or earned income, whichever is smaller, with an additional amount allowed for those aged 50 or older. Again, this will be something to memorize. We'll have it linked below. Deduction limitations apply if the taxpayer or spouse participates in an employer-sponsored retirement plan, and the deduction may be phased out based on AGI. Now, next up, we got a Roth IRA. You might be wondering why we have this here if there's no above-the-line adjustment available for Roth IRA contributions. Well, first off, you just should know about these. The difference between Roth and traditional IRAs are discussed throughout many lessons, as well as Roth IRAs. You pay tax on the money now, you put it in your retirement account, and then once you get the money out of there, you don't pay any tax on it. Whereas traditional is basically like your 401k where you don't pay tax on it today. It's a deduction, and you do pay tax on that money once you get it out, once you retire. So here, just mentioning the Roth IRA, make sure you're familiar with those amounts. The student loan interest deduction. Well, taxpayers can deduct up to $2,500 of student loan interest per year, subject to phase out based on AGI. We've got our HSA deduction. If you've got a high deductible plan through your company, get some health insurance. Contributions to these plans are tax deductible, but the deduction does not apply to Medicare Part A or B. The deduction is available for pre-tax contributions if part of a high deductible plan. So all of these, there is a line item for them on your 1040 to deduct. But keep in mind, for example, if you put money into a 401k, that's going to be on your information on your W-2. So whether you contribute yourself and you may claim these deductions, like if you've ever done this before in, let's say, TurboTax or anything like that, you'll see that there's a line for it. But if it's done through your company, you may not have done this physically yourself. So just keep that in mind. But generally, I would, for all of these, try to find where they are on the 1040. That is great practice. Really kind of drills it in for you, what you need to know. Next up, moving expenses. Now, this is only for military orders. So there used to be a lot of rules before the tax changes where you could be a normal person and deduct your moving expenses. But now only military personnel can deduct moving expenses related to their military orders. Next up, we've got deductible parts of self-employment taxes. Self-employed individuals can deduct 50% of their self-employment tax. Self-employed health insurance deductions. Self-employed individuals can deduct health insurance premiums paid for themselves, their spouse, and factors such as income and plan-specific limits. Again, a lot of these you just have to memorize, and I know it's a lot, and there's not really any other way around it other than just practice and memorization. I mean, you can do it. It's a lot of work, but you can do it. Penalty on early withdrawal of savings. Now, CDs, these are certificates of deposit, generally very low interest rate, but very safe investment. You give your money to the bank, and they'll maybe give you, I'll give an interest rate, but interest rates are always changing nonstop, as we know. Let's say they'll give you a 2% interest rate. If you keep your money at the bank, if you give them, let's say, $20,000, they'll give you 2% over the course of the next 2 years. Now, no matter what interest rate environment we're in, that's a pretty low amount, but they're very, very safe. So that's the whole point. Now, the whole point is that you have to keep your money with the bank for that longer period of time. And if you have an early withdrawal of savings, this is actually deductible on your tax return. So that's what we're talking about here. Alimony paid on or before 12/31/2018. So we've got the whole concept, and we'll dive more into this of divorce. If you've got a divorce before or after 12/31/2018, because of the Tax Cuts and Jobs Act, there were different treatments for recognizing alimony as income or recognizing alimony paid as a deduction. So alimony, that's money you paid to your ex-spouse. For divorce agreements finalized on or before December 31st, 2018, alimony payments are tax deductible. Afterwards, it's kind of simplified, right? That's in essence the point of the Tax Cuts and Jobs Act, was to simplify everything. So basically, before, if you had a divorce agreement that happened before 12/31/2018, man, there must have been such a a rush to get divorces finalized at that time period. But if you had anything before, then you do include income if you're receiving alimony as income, and you can deduct it. But think of it like that. Because of the Tax Cuts and Jobs Act, it worked to simplify everything. If you have a divorce agreement finalized after 12/31/2018, you don't include alimony paid as a deduction, and you do not include alimony received as income. Tuition and fees deductions. Taxpayers can claim deductions for tuition and fees subject to AGI limitations and phase-outs. And then attorney fees in discrimination and whistleblower cases. Taxpayers can deduct attorney fees incurred in certain discrimination and whistleblower cases. Now, we've got a bunch of these adjustments. You'll see more of them. We'll see them in different contexts. Just make sure you are familiar with them. You're going to see them a lot throughout this course. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.